Well, let's now focus on commodities, particularly those precious metals, given where they've gone, those records that appear to have fallen day after day, and gold up again significantly overnight. So what's fueling that boom in precious metals? Sam Laurie is the Managing Director of Liberty Bullion. He joins us now. Sam, welcome to Ausbiz. Good to have you on the show. So it has been something to behold, not just gold, silver, platinum, everywhere you look in the precious metals market. What do you see as being the drivers for this?
So given that these are monetary metals, first of all, it's great to be here. But given that these are monetary metals, I think it's important to think about them from a monetary policy perspective. So the biggest buyers of gold around the world are central banks. You look at what central banks are doing with interest rates, currency printing, etc., and you can see why people are looking towards precious metals, things that have typically kept you safe during inflation, particularly very high inflation. So over in the US, we've got Jerome Powell. He came out a month or two ago saying that they were no longer going to worry about their inflation target. They were going to focus on full employment and the stability of the financial system, so stopping banks from going down. That signaled to the market that he's not very serious about fighting inflation anymore, despite the fact that it's above their 2% target. So you combine that with the fact that last week he's again come out and said that he's ending quantitative tightening. They're going to stop selling bonds off the Federal Reserve's balance sheet. And you can read that as a signal that they're going to start buying them again, quantitative easing, essentially a really fancy way of saying money printing. And you look at the M2 currency supply in the US and it's starting to go parabolic again. So it's currency printing, it's the dropping of interest rates as well. They're now dropping interest rates in the US and talking about further cuts. So all of this is a perfect storm for the precious metals where people are worried about runaway inflation in the US. And again, you combine that with Trump's tariffs. Tariffs are inherently inflationary. So you put all of that together, you can see why people are really worried about inflation and worried about the loss of their purchasing power and why they rush towards inflation hedge assets like gold and silver to protect them from that inflation.
Do you see this as, particularly, I guess, from an investor point of view, as risk aversion while they're moving into precious metals? Or has it reached that point now where particularly gold and silver have gone parabolic that it's just more and more people are jumping on that trade?
Well, I don't necessarily see it as risk aversion. I mean, like you were saying earlier before I hopped on, the US stock market is at really high levels. It's not like we're seeing a big market crash and people running towards safety. I see it more as a debasement trade where people are looking to buy any assets, whether it be equities, commodities, cryptocurrencies, anything that's not dollars. So again, it's just a runaway from the fiat currency that gets printed out of thin air towards hard assets. So in that scenario, you can see everything run together, stocks, commodities, everything all at once. And that's really what we're seeing at the moment. So again, I don't necessarily see it as a risk-off trade, despite the fact that gold is known as a risk-off metal. And another point on that is that silver, which it doesn't typically outperform gold during market crashes, but at the moment it absolutely is. So, silver's up over 75% for the year in US dollars, despite the fact that it's not just a monetary metal, it's an industrial metal. So if we were seeing a big drop off in risk, gold to outperform, it's the other way around.
So you remain very bullish then, particularly on silver?
Absolutely. So, look, don't get me wrong, gold and silver have had a great run so far, but we're still very early days in this precious metals bull market, and I'll step out a few reasons why. So, first of all is the gold to silver ratio. So that's how many ounces of silver it takes you to buy 1 ounce of gold. Today, we're floating around the 80 to 1 level, 80 ounces of silver to buy you 1 ounce of gold. Now, you compare that throughout history, that's quite high. And generally during precious metals bull markets, that ratio drops considerably. So in 2011, that ratio was 30 to 1, 30 ounces of silver bought you 1 ounce of gold. And at the peak of the 1970s bull market in precious metals, that ratio hit 16 ounces of silver to 1 ounce of gold. So with such a high gold to silver ratio, it tells you that we're very early on in this precious metals bull market. If the ratio was around, say, 30 to 1, I'd say, look, the good gains have been had and, it's probably getting a bit hot in the kitchen. But again, that tells you that we're early. And going back to silver in particular as well, we have just seen the US dollar price of silver break out of a 45-year cup and handle pattern. So what I mean by that is, well, first of all, silver hit $50 US in 1980. Almost ancient history now, 45 years ago. Then it dropped. and then it hit $50 again in 2011, US that is. Fantastic. And then it dropped. And now we have just seen it crack through the $50 level for the first time to break above it. Right now at $52.54, so sitting above it nice and healthily. And that, if you look at it from a trader's perspective, that is a breakout of a 45-year cup and handle pattern, as I've said. That is the biggest cup and handle pattern in history. And cup and handle patterns, if you look at technical analysis, they typically resolve to the upside very, very violently. So that's why, for me, I'm particularly bullish on silver here. Don't get me wrong, I love gold, and gold's going to do great, and it's been doing great. But if you put a gun on my head and said, you pick one, Sam, then the answer is silver here, definitely silver.
Yeah, that's interesting. Well, Sam, on gold, historically at least, have the moves you've seen more recently been unprecedented?
Well, in recent history, yes, but if you look a bit further back, no. So the last time inflation was as bad as it is today in the West, in the US, Australia, the UK, was the 1970s, right? That was a period during which inflation hit double digits. People lost a lot of purchasing power. And what did gold and silver do during that time period? Well, they did what they always do, which is protect their holders from inflation. How do they do that? Well, gold went from $35 an ounce in 1971 and it hit $850 an ounce in 1980. 9 years later. So that's a 24x return in 9 years. Silver did even better percentage-wise. It went from just over $1 an ounce US in 1971, and then it hit 50 in 1980. So about a 35x return on that one in 9 years. And that was during a period in which the stock market and the property markets in the US moved sideways in dollar terms, and therefore lost value in real terms because the dollar lost real purchasing power value. Is it unprecedented to see gold moving the way it is? Look, not if you look back long enough. And again, this is the worst inflation we've seen since the 1970s. So if you want to use the 1970s stagflation as an example to look at, I think it's a pretty good example.
And Sam, what are you seeing in the other precious metals such as platinum and palladium?
So, look, platinum has been an incredible performer this year. It has just broken out of a 15-year downtrend. So, in 2008, it was around $2,000 an ounce. Today, we are sitting at $1,622. And earlier this year, it was as low as the 900s. So, it's had a great move off the bottom there. It's super cheap compared to gold still. So, again, on that gold to silver ratio, there's also the gold to platinum ratio. So back in 2008, platinum was twice the price of gold. Today, it's less than half the price of gold. So if you expect that ratio to return to even just 1-to-1, then, platinum will outperform gold. And if you expect it to return to 2-to-1, then platinum's going to really outperform gold from here.